I'm one who supports the traditional mission of FHA. I think it's important, however, that we balance that traditional mission of FHA with securing American taxpayers from having to step in and bail out more housing programs. Last year, we were in the hole $688 million in FHA. We had a mortgage settlement of $1 billion that was able to plug that hole. Per Mr. Stevens' insightful comments, the budget came out with a hole of a request for $943 million for FHA, right under $1 billion per your point. A lot of us are concerned about the solvency of the program and taxpayers stepping in and bailing out the program. I think all of you on the panel had agreed that you're in favor of some form of risk sharing. Is that correct? I think Mr. Nagelbauer asked that question. You all had agreed to it. What kind of ratio do you think is appropriate? I don't know if we're going to, is it 80-20? Is it 50-50?
Congressman, a couple things that I would suggest. One is that FHA already has the authority to implement a risk share pilot, and that has not been done to date for a couple of reasons, but one of which is just resources to get it going.
What ratios? What kind of ratio do we have?
The thing that I would suggest, ratio is a difficult one for the pilot, but I would suggest that we need to make sure we do it in a way that creates a clear market where there is not an option other than risk sharing in the FHA for the pilot, because otherwise the execution will never work and the pilot won't work. So whether you start off with 10% as a goal or some small percentage to test the pilot before you expand it, I think that's where you need to start.
And I want everyone to have a chance to answer it, but I'm a little confused on why we're asking for a pilot. I mean, isn't our pilot the VA? I mean, isn't the VA really a pilot program for us, and it's worked? Why do we have to do another pilot? If we're talking about pilots, I wish we would have talked about pilots with regard to Dodd-Frank, not FHA. But we've already tested it out with the VA. Why are you, it seems like we're kind of slow walking this thing a little bit when we've seen it tested, we've seen it works. Why don't we just do it?
Sarah, you want to take it?
Well, a couple of things. First of all, VA is a much smaller program, and it serves a variety, and although it has a much lower default rate, the borrower pool that's eligible is different. They tend to have better FICO scores, and there is a set of ways in which FHA has
But by the very nature of the definition of a pilot, it's a smaller program. I mean,
it's more than a smaller program. It has a very different and targeted borrowers who are eligible, and most of us would be would not predict that you would see the same behavior and the same performance on a pilot that was applicable to the entire FHA borrower.
What leads you to believe that?
Because the borrowers in VA, first of all, are all military and eligible through their service in the military. There are ways in which they may lose some eligibility for other VA benefits if they fail to perform on their FHA, which creates a different incentive for them to perform on their loans. And they also tend to be concentrated in particular markets where some of the risks that FHA has borne aren't there. So if this were expanded to the FHA traditional markets, you may see very different performance. That's why we would propose taking an FHA-eligible borrower and find ways to share risk. It's also, in many loans, it's not risk sharing at all because it's a 25% top loss coverage, and many of us would propose that FHA design a real true sharing of risk throughout the borrower to align incentives better between the insurer and FHA.
And I appreciate your quick answer, getting it all in there. Maybe we can continue a dialogue on it. There's some more questions I have on the pilot program. In regard to premium increases, we're at 1.35%. We have a cap of 1.5%. We're not there yet, but I think you all indicated that you support the legislation that passed last year that would bring us up to a cap of 2.05%. Do you guys all support raising that percentage, maybe past the 1.5%, something closer to the 2% that was in the legislation that you all said you support? Anybody? My time is up, but I'm not getting called, so I'm going to ask you to answer the question.
Congressman, the one thing I would say is that FHA, the good news is FHA has raised their premiums multiple times, and
it hasn't worked yet. We're still
They wouldn't
short.
have that capability if they hadn't done it here. They just raised premiums April 1st by another 10%, and application activity within the FHA dropped 14% this last week. We're already losing share as a result of raising those premiums.
$943 million shortfall this year. So I guess
On the HECM program.
Go ahead. What's that?
The shortfall this year has to do with losses on loans that they have already insured, and the predicted performance of the forward-looking book.
Are you calling Mr.
is
Stevens
highly
out
profitable.
for his performance at listen, I'll yield back, and maybe we can chat further on this at some other time.